What's up, guys? In today's video, I'm gonna give you a little bit of a behind the scenes look into what a day in my life looks like, but first, we gotta fix this lighting. I've always wanted to do that. Hopefully it worked out okay. But anyway, this is typically what things look like when it's time to film, and so I decided to transform it a little bit, get set up, and while I continue to go throughout my day, answer a couple of questions for you guys. Generally, this is where my day starts. Oh, I forgot to bring my mic down. Okay, so hopefully that audio is better now, but generally this is where my day starts, especially if I'm filming either for YouTube or the new YouTube shorts we're doing, Instagram, whatever it might be. On certain days, once I'm done filming, then I'm out and about looking at properties or managing renovations or whatever it might be, and I've got a couple of vlogs coming up for you guys to show you what those days in the life look like. But today is what I call an in-office day, where I'm just kind of getting some work done, and I figure that's a great time to show you what it looks like to be working in this real estate investing business, and also answer some of the questions that you guys have been sending to me over on Instagram DMs. First up, a question that I've been getting a ton is how I'm finding deals in this current market, and am I seeing that it's becoming more and more difficult to invest in on-market deals, whether I'm buying them to BRRRR or to wholesale? And the answer is kind of yes. I think that there was a run there when interest rates were really low and prices were going higher and higher, where it was really hard to find distressed properties that were on market that weren't getting snatched up immediately. I do think things have calmed down a little bit, and so I am still looking for deals on market and working with real estate agents to bring me pocket listings. But also something that I'm going to be doing today, and I'll show you guys a little bit of, is I'm targeting failed listings. So during that time period where people were listing their properties super high because interest rates were low and they thought everything was going to go crazy, there was a subset of those properties that didn't sell because the price was too high, they were too distressed, whatever it might be, and the seller may have took the property off market. And so I'm making a whole video about this, and I'll give you guys a sneak peek. But what I'm doing is I'm pulling lists of those failed listings that were for distressed properties, and I'm cold calling the agents to see if the homeowner might still be interested in accepting an offer. Some of you have also asked about cold calling and just how to make it easier, and this is one of the ways that I like to do it, which is not necessarily a lot of volume, right? There's not going to be thousands and thousands of real estate agents for me to call the same way there would be for me to call homeowners. But with real estate agents, they're usually a little bit friendlier when they're answering their phones. They are willing to talk about real estate and willing to talk about sales, and you can also use that as a networking tool. So cold calling agents is a good way to get started. Another question that I get often is about book recommendations, and I love reading books. I think that if you are interested in investing in real estate, YouTube channels like mine and other people here on the platform are great for getting some insight and getting some knowledge. But I do think that like long form content and reading books is where you get like all of your questions answered from A to Z in the way that you just won't if you're just surfing the web. So if you're interested in just general real estate investing and maybe you're not exactly sure what strategy, I recommend you read the ABCs of real estate investing. If you're interested in BRRRRing, where you want to do a renovation and then refinance and keep the property as a flip, I believe the name of the book is the BRRRR book or something like that from David Green over at Bigger Pockets. That's a great one. And if you're not capturing everything the very first time, it's totally okay. I reread certain passages in that book where like they were explaining the math and how things work. I reread it multiple times because sometimes it just takes a couple of iterations for it to click. So if you need to do that, totally fine. And then if you're interested in multifamily, whether 2 to 4 units, which are considered like residential, or 5 units and more, which is considered more like commercial, you should read the book on multifamily investing. Part 1 is for those smaller multifamilies, and part 2 is for those bigger multifamilies. I've got links to all those books and a few more in the description, as well as in the description of all of my YouTube videos, so definitely go check those out. Another type of question I get often is about how I set up my LLCs and how I manage taxes and that type of thing. And I haven't always had a good answer for people because I don't want to give out legal advice, and you know how my finances work and who I have on payroll and who I'm working with is just completely different than someone else's. But I am happy to say that like the way my LLCs are set up now is much better than it was when I first got started, and that's because I started working with a company called Prime Business Lending. And so they'll actually do a free consultation for you using the link in the description, where you can basically tell them about your scenario and they will give you a recommendation and help you set up your LLCs and manage your taxes and all of that good stuff. Part of the reason that I started working with them to restructure my LLCs is because I opened a separate business to just the real estate investing business and the YouTube channel, but I also started an agency helping other people build their YouTube channels and their own coaching businesses and things like that. So that's been a ton of fun, and that's another thing that when I'm in my in-office days, it's something that I spend a good amount of time managing and helping to get set up. We've got a handful of clients now, but are expanding to work with more and more channels, so that's a lot of fun. And I've got to take a meeting for that actually really quickly, so I'll be back to answer more questions in just a bit. Yeah, so I think we talk about like what does a package look like for like an affiliate deal where you can test out the tub and make content about it and people order, then that's trackable to you and your brand. But I think you make the content in exchange for getting a tub.
This is nice. I like the talking head stuff that'll be rolling put into certain things.
Okay, I'm back. Now, next up, we have a question about my rehab calculator, which I talked about in this video, which basically is my attempt at helping real estate wholesalers, especially new real estate wholesalers, get better at estimating rehab for their deals. A rehab budget can get very, very specific depending on the investor who's going to be doing that rehab. But for a wholesaler, it's actually more important just to get a ballpark number than to get like a specific, use this type of carpet, use this type of paint, etc., etc. And so this rehab calculator that my brother and I built works on taking some of the most common renovations and assigning price points to them that are industry standard kind of averages, so that all you have to do while you use it is go through and check off what needs to be done rather than you having the knowledge of how much that thing will cost. So the rehab calculator will create a budget for you without needing you to put any prices in or have any construction experience. So if you want to use that, you can get a free 3-day trial to my entire Run the Numbers training program, which includes access to all of my custom built calculators, including the rehab one, and also a training on how the rehab budget fits in with things like your ARV, your wholesale fee, and allows you to come to your maximum allowable offer. So I'll put a link to that 3-day free trial in the description below so that you can go check it out. Another really good question that I often get is around finding cash buyers, especially like the serious, consistent cash buyers. And for this, I really use PROPSTREAM. Now, I do get into like local Facebook groups and Bigger Pockets forums and things of that nature, but PROPSTREAM is like a very good way to find people who maybe even aren't active on those social media platforms. And really, PROPSTREAM can pull a list of cash buyers, but there's certain filters that I like to add in there, which are things like properties purchased within the last year, so that I'm not getting people who bought a property for cash like years and years ago, but who are active cash buyers. Also, people who own more than one property. So I don't just want like one rich person who happened to buy their house in cash, but I want consistent people who are investors buying houses for cash. And so you can put in, I want somebody who has at least 5 properties or has at least 10 properties. And that'll be a really good way to kind of narrow down how to find cash buyers in your particular market. And then you can skip trace them and cold call them, even in the same way that you would do with sellers. Our next question is about whether or not you can use something like a hard money loan to do a strategy like house hacking. And this is where you really want to make sure that your strategy matches up with the type of financing you're going to use. So generally, when you're thinking about a hard money loan, these are what are called bridge loans. And bridge loans are supposed to be a bridge between when you purchase the property and when you put long-term permanent financing on the property, and they kind of just give you the money just for long enough to bridge that gap. And usually during that gap, people are going to be doing something like a renovation. So you can imagine over here, if I purchase a rundown property, then I need a hard money loan or a bridge loan to kind of bridge me through that renovation. And then once the property is in good condition, then I can go out and get a nice, full-time, permanent 30-year mortgage on the property that I wouldn't have been able to do if I tried to do it when it was in that poor condition before the renovation. So the bridge loan really is a short-term solution, really 6 to 12 to 18 months, depending on the size of your project, but it's not something that you're going to put in place and then just use forever. Generally, they don't loan you the money for longer than like 18 months, and they also have really high interest rates, around 10 to 12%. What you are using when you're doing something like a house hack, when you're gonna live in the property and you want the financing that you use to purchase the property to last you for the next 30 years or so, that's when you're gonna be using something like an FHA loan or even a conventional loan. Now, the benefit of the FHA loan is that that is a low down payment loan, call it 3.5%, versus the conventional loan, which is like a 20% down payment loan. And with that FHA loan, if you're agreeing to live in the property for at least a year, you qualify and get to use that 3.5% instead of the 20%. So if you're looking at a house hack, you actually don't need a hard money loan because you're not trying to get short-term financing and you're generally not trying to do a big renovation on the property. What you're looking for and the benefit of house hacking is that you can use that low down payment FHA loan and it'll be long-term, it'll last you for as long as you want to keep the property. So hopefully that makes sense. Just remember things like hard money loans, private loans are generally short-term bridge loans just to kind of bridge you from one situation to another, versus more permanent financing is what you want to get, where you're going to be looking for like a 30-year loan that you can just hold on to forever, lower interest rates than the hard money loan, payments stay the same, and you don't have to pay it back in the next year or so. If you guys like this style of video, go follow me on Instagram and DM me your questions, and they might make it into the next version of this video.